Yeah, we will start the session at 8:05. So just hold on for 3 more minutes. Okay, hello and welcome to everyone. Thank you for joining us today. So let's start with a quick introduction. Uh, I think there is some issue. I lost my screen. Okay, hold on. Yeah. Mm, I think my I'm not sure if I'm audible. Can you give me some? Can you say someone? Because I have lost the control. Something has happened. Some technical glitch. Kamal or Tushar, if you can hear me, I think I have lost my PC is hanged.
I think some issue with Renu's device. She will reconnect. Is everyone able to hear me? You can just reply with a yes. Okay, perfect. Thank you. Thank you. Thank you so much. So let's just wait for Renu and then we will start the session. Thank you.
Hello. So sorry for that. So sorry for that. My PC was hang. My apologies again. Let me start with a quick introduction, and I'll quickly hand it over to Kamal. I hope I am audible to everyone. Okay. So let's start. So everyone knows the agenda. We'll have an introduction and a speaker session. So today we have Mr. Kamal Jaswani, the Q&A session, and the note of thanks. So let's start with a quick introduction. I am Renu Mehta, VP for Professional Development. And just to introduce what is PM PITSTOP, it's specifically for people joining for the first time. I would say that it provides a platform where subject matter experts and project managers from many industries share their experiences and demonstrate the use of various tools and techniques in this real world, right? So that is about PM Pitstop. Let me quickly introduce Kamal. Hi, Kamal. Hello.
Okay. I tried putting that background, but it is inverted, so better to have no background.
Okay, no worries.
Yeah.
Maybe there's something issue
Yeah.
with that. Okay. So let me introduce Kamal. So and let's talk about quickly about this session. So when Kamal came in, said that he would like to a session, and I was saying this is a very interesting one because as project managers, we spend a lot of time managing budgets, risk, timelines, and resources, right, at work. But when it comes to personal tax planning and financial decisions, many of us still rely on assumptions, last minute planning, or scattered advice. And the thing is, why I brought this particular session was because this is the perfect time, the way the year has started, and we can start planning our taxation. So, introducing Mr. Kamal, he is a certified financial planner, two times TEDx speaker, Economic Times Masterclass facilitator, and founder of Magnetic Wealth Hub. So, with his over of 25 years of experience, he has trained more than, I would say, 1 lakh 10,000 as he has precised given the number through corporate sessions, workshops, and online programs. So we are excited to learn from this insights and practical experience today. So over to you, Kamal. Without further delay, thank you.
Thank you. Thank you so much. Yeah, so the topic I'll share a bit about why I suggested this topic because I have been conducting these sessions for various companies, tax planning session on for Times of India. Also, I've done the session. I did the session for S&P Global, where I had around 650 people joining from various locations, and the topic was tax planning. Even last week, I conducted a session that was again for tax planning. For QAD, also, I have conducted the session. So I thought if I'm conducting sessions for various corporates on tax planning as to how they can manage their money and the basics of financial planning, why not do this session for our own chapter? And that's the reason I said this is something which everyone needs, and everyone ends up asking the wrong person about it. They may end up asking HR, what should I do? Or they may end up asking their friend, what should I do with the tax planning? How should I manage it? So that was the background of coming up with this topic. And now directly let me share the slides. Just give me a minute. I'll share the slide with you all. Is the presentation visible to everyone?
Yes, yes, please go ahead.
Okay, thank you. So today's session is not about you becoming a chartered accountant or a tax planning expert. It would also not cover all the deductions available in India. We would be discussing the most most commonly used deductions and exemptions available for the corporate employees. So we will be covering like sections like ATC, ATD, Section 24, HRA, LTA, and standard deduction and everything. We will also be discussing about old tax regime versus new tax regime. It is more about getting the clarity so that you are able to make better tax decisions. Okay, and with confidence. So yes, my introduction has already been done. I'm a certified financial planner, and that's why I'm giving you guidance on the tax planning, which is one of the aspect of financial planning. Financial planning includes uh, investment planning, education planning, marriage planning, tax planning, estate planning. Okay, so all of these together becomes financial planning. So project managers, because I did my PMP in 2008, and after that I worked as project manager in various companies, including IBM. There I was into remote infrastructure management, it handling the CritSit projects for Australian banks. So I know that what we used to do. We used to manage the scope, the cost, the time, the HR, I mean all other resources. Also the risk part of it. We used to have this risk management, risk control. All these things we used to do for a project. But when it came to our own personal tax, we used to basically depend on a last minute advice. We used to look at some Facebook messages, some random WhatsApp forwards, and also deductions. We used to watch the reels. Okay, 1 minute reel, and we'll say, okay, fine. In this 1 minute reel, I'll understand what is the deduction. So where a 1 minute will not cover the details of it. It will give you maybe only the one liner rather than the actual nitty-gritties of that particular deduction. And that's why now also I continue receiving Instagram reels, on my WhatsApp asking me, sir, is this true? And I tell them it is always the half truth because it does not give you the complete details. So I give them more details about it. And even the regime selection is more about guesswork. That a new regime is giving me reduced taxation slab, so let me go for new regime. But there are lots of cases where the old regime is actually better. So tax planning is also a decision making problem. Okay, we need to have that kind of a structure, a system which can help us make it or simplify it. Okay, make it easier. I still remember in 2010 I had conducted one session on how to file your ITR, and the session I was conducting it was at IBM. And that time I was an employee of IBM into project management. But then because I was passionate about this topic, I used to file my own ITR. So I said, let me help all the other project managers at IBM to understand about the taxation and the ITR. So 2010 IBM, and that was just out of helping the other people. And move forward to 2026, 16 years back, again, I'm doing the session for project managers. Thanks to the PMI MC for organizing this tax planning session. So we need to bring the same structure of project management into tax planning also. And yes, if you can relate to these points, when do we actually start looking at tax planning? Sometimes when HR would ask that where are the declarations and all that, or the finance team would ask you, or now the structure of the taxation has changed, and sometimes if the salary rate gets reduced, and especially in the month of March, February, people panic because the salaries are not as per their expectation. Uh, and again, there are different opinions talking about it. So we get confused. How many of you can relate to this point? How many of you have done this? I would say I have done this when I was not into finance. I have done most of these things. I have been through March panic. I have told my family मार्च में सैलरी नहीं आने वाला है. ओके, मार्च में कुछ नहीं मिलेगा, डोंट एक्सपेक्ट एनीथिंग. I have invested in IDBI bonds. I have invested in options, where like, just for the tax planning part, different types of insurance policies, pension policies, without even understanding the details of them. The only thing I understood about those investment was it is eligible under Section 80C. That is the only thing. So it was not investment planning with a tax advantage. It was just tax planning with investment as a side thing rather than the main thing. And that's where, when I look at those investments, I'm like, what nonsense I have done in my life. All those random investments with no clear-cut strategy and the plan. And why did I do it? The same thing. We do not plan tax. We just react to the needs, to the time, and accordingly we behave. Okay. So the right regime actually does not depend on anyone else. It depends on your own numbers. Okay. And today you would be learning how to use your numbers to decide your tax regime rather than anyone else telling you. Tax planning. So today's session, so first is the tax planning basics, then the deductions and exemptions, and then we will go for the choosing your tax regime. In just 5 minutes, you can do it yourself. I will give you the tool. I have already given that tool at O9 Solutions recently. I've created a co-branded tool, and just 4 days back, I gave the tax planning tool to the Times of India employees. And very soon in other companies, the my tax planning tool would be, a co-branded version would be created for them also. So today you will be getting that tax regime selector calculator. And the feedback which I have received is actually it is much better than the regime selector available on income tax portal or the clear tax portal, because this one is much more user friendly. So you will be getting it today. And we will also discuss about the tax pattern. Probably most of the people may have not even realized that what has happened in the last 8 to 10 years. There has been a major shift. And when you look at each of those announcements in a sequence, you will understand the larger pattern as to where are we heading towards, what is happening with our tax planning. And the last slide would be about what are the tax-free options available for Indians. So that also we will discuss. So the goal of this entire session is more about bringing a clarity, okay, as to how to check your numbers and decide for yourself. And many people get confused between tax planning and tax avoidance. I still remember during my corporate days, say around 14, 15 years back, uh, people used to print medical bills in office, okay, and submit them to the finance team and the HR team. I was like, which medicine is this? They said, we just made up the names. They used to make up the names. They used to bring blank rent receipt books to office and everyone used to take 12 leaves from that rent book and fill anything over there and submit it to the HR, to the finance team. So I have been through those things, what all people have done to avoid the tax. But tax planning is not that. And by the way, all those things, which used to work in the past, they do not work anymore. In fact, a few things which I have seen, like people are not taking any health insurance policy and just taking somebody's receipt and replacing the name and giving the fake receipt that they have taken health insurance. And even Section 80G donations, people have done all those things. But now, all those people are getting notices. All those people. Okay, they are getting notices for all the things which they have done in the past. Okay, सब पापों का अभी सब गला फूटा है. So the income tax department, they are using the AI, they are using the data. So with the data science and basically combining the AI with that, they are easily able to identify the pattern and they are able to send the notices to people. Okay, so you don't have to get into those things which can land you in trouble. And when you do end up getting a notice, you may have to pay double of what you have saved. So tax planning is more about understanding the income structure, understanding the deductions, and then selecting the right regime so that your tax flow is comparatively low. And also, if we also have to look at what is the tax we are paying today, and how can we ensure that we do not pay the tax in future? Because many times we are not able to avoid the tax liability today, but there are methods by which we can ensure that our income is tax free in the future. So the last slide we will be discussing about tax free income. So good tax planning is all about awareness and rather than going for shortcuts. And just I'm taking a pause over here. Do you think we are going at a normal speed or is it too fast? Earlier I used to go slow, but now in the time of Instagram Reels, I know people attention span is lower. So I do not go very, very slow like earlier. But if it is too fast, then please let me know. If it is okay, just type okay in the chat window. Okay, thank you so much. So let's understand the salary layers. Basic salary, by the way, the session timing for everyone, although the session timing is 8 to 9:30, but I would be completing my part of it by 9:10 so that you have 20 minutes left for the Q&A. Although the session is 8 to 9:30, but my part would be done by 9:10 so that you can ask me Q&A in the last 20 minutes. And I would be here as long as the Q&A are there. Okay, questions are there, I will be here. So let us understand the salary package. This is where I see most of the people, having a confusion. Uh, they just look at only the take home and they think that is their only income. Okay, that means they don't look at the CTC at all. They look at in hand, and when they go for interview and all, that's where they look at only the CTC. So some gap is there. So I'm just trying to simplify it for you. CTC also includes your employer contribution to the PF. That is a major component. So when you look at the gross income in your salary slip, that is excluding your employer's contribution to the PF. What you see as a PF contribution in your salary slip, that is the employee contribution. That means contribution from your side. What you do not see in your salary slip most of the times is the employer, what they have contributed to your PF. And after retirement, you will be getting that component also. along with the returns, and that would be tax free for you. So CTC minus employer PF contribution, that would be your gross income. And after from the gross income, you have to exclude deductions, like for example standard deduction, that would be excluded. And the remaining part now, which is which is liable for tax, that would be considered as the taxable income. And from this taxable income, tax would be deducted, and what you get after deducting the tax, that is your net income, that is your take home income. Okay, so employer PF contribution may not show in your salary slip, but it is also getting deposited in your account only. Employee PF contribution, that you may not get in hand, but even that amount is being deposited for your future only. So lucky are the salaried people, at least some amount is compulsorily being invested for your future. So, but that may or may not be sufficient to take care of your retirement, but it will at least give you some basic amount. Okay, and today we will be discussing about the reimbursement and the perquisites also. We don't live on the CTC. We live actually on the net income what we get at home. So we need to ensure that the tax payable is comparatively lower. Okay, we get more of a tax-free income so that our tax net take home is more. And now understanding the difference between old regime versus new regime is in the old regime, the rates are higher. Okay, the tax rates are higher. Whereas in the new regime, the tax rates are comparatively lower. Okay, and they are more simplified. Because in the old regime, there are many deductions and exemptions. Most of the deductions are not available under new regime. Very few deductions are available under the new regime. Okay. And who is the old regime useful for? For the people who have enough deductions. Okay. And new regime would be useful for the people who do not have more deductions. So for them, they will end up paying lower tax in the new regime. Old regime, you need more planning and documents you will require, but in the new regime, because you are not getting the deductions, you may not require more of documents and all that. And some of the common tax benefits you should be knowing is one is the section 80C. Section 80C, the limit allowed is 1.5 lakh rupees. Okay, and it includes your employee PF contribution also, which means let's say if your employee PF contribution itself is let's say around 10,000 per month. Okay, which means 1,20,000 it is being deducted from your salary. That amount would be counted under 80C for deduction. Okay. Similarly, your life insurance premium, your PPF, if you are putting any money into PPF, and ELSS or tax saving FDs. Okay, so all those options, they would be considered under section 80C. But the limit is only 1.5 lakh for all of them together. It is not PF 1.5 lakh, life insurance premium 1.5 lakh, PPF 1.5 lakh. No. Okay, so many people, what they do is when they do not know how to manage the tax, they end up putting 1.5 lakh in the PPF because they think 80C PPF 1.5 lakh is allowed. But actually, if you remove that employee PF contribution, then you may have to invest only maybe around 50,000 in the PPF, or maybe around 10,000, or maybe nothing in the PPF. It depends on your employee PF. Section 80D. 80D is about health insurance premium for yourself, your family, and your parents. Okay, in that you can get benefit if you're paying for yourself and your family, then 25,000, up to 25,000 you can get a deduction under the old regime. And if you are paying for your senior citizen parents, then for them also you get additional 50,000 deduction, total 75,000 deduction. If your parents are not senior citizens, then you get 25,000 deduction for them also. So total you get 50,000 to 75,000, which I will show you in the tax calculator to make it super easy for you. Even the home loan part, interest component is allowed as a deduction under section 24, and the limit is 2 lakh rupees. Up to 2 lakh rupees interest which you have paid on a home loan, that would be allowed as a deduction. And the principal repayment, that is again counted under the section 80C. Okay, so 80C, I told you the maximum limit is 1.5 lakh. So even the principal component on the of the home loan, that is being counted under 80C. Now, how do you know what is interest component and principal component? For that, you need to simply look at the email which has been sent by your bank. You know, when you take a home loan from any bank, every year they send you a statement. In that statement, they give you a breakup of the total EMIs, out of which how much is the principal and how much is the interest. Okay, so you will be getting that exact amount from that statement itself. You don't have to bother calculating anything. HRA exemption is again allowed subject to certain conditions, which I will show you in the tax calculator. Okay, and do not just run for deductions. A deduction is useful only when it is aligned with your investments, and your investments are only useful when they are aligned with your goals. Okay, so first you need to make a list of your goals, and based on that, you have to look at the investment option and see which one is the most tax-friendly option. Just because deduction is available, you don't need to put money over there. But yes, if something is you have to invest, see how you can make it more tax-friendly. Okay, so tax saving should actually support your financial life, not disturb it. Which means the people who end up investing only in month of March, what happens in that month of March is they stop going to restaurant, they stop ordering anything because they have less money in that month. So that should not happen. You should plan it properly. Let me move to the next one. Okay, a few mistakes before we jump to the tax calculator. Let us understand the mistakes. Investing only to save tax. Okay. Choosing the product purely for tax benefit without considering the financial fit or returns. This is a mistake I have done before I became the financial expert. I have done this mistake. Choosing a regime without calculator, just picking on what other people are saying. Okay, that is a mistake I've seen in many people doing the same mistake. Ignoring the monthly cash flow impact, which means uh, investing only in the month of March or only in the month of December when you have to submit the documents to the finance department, that can actually impact your cash flow. Copying someone else's strategy, again, that is a common mistake which people do. We ask their colleague and follow the same thing, and that's where there is a problem. Waiting till March to act, that is also another common mistake which people in job end up doing. And confusing tax saving with wealth creation. Understand one thing, the government is giving you the tax advantage not to make you rich, but to ensure that you do not become dependent on them. Look at the amount which they are allowing under Section 80C, only 1.5 lakh. Imagine if you are investing only 1.5 lakh under 80C. Okay, if you are investing only 1.5 lakh, for even if you invest for 20 years, how much you would have invested? Hardly 30 lakh. How much that would become? 50, 60, 70, 80 lakh. Or that's it. That is not going to take care of your complete retirement. But that will only ensure that you do not become dependent on government of India. So tax saving is not wealth creation. Tax saving is basically an added motivation for you to focus on your retirement plan. And to even like health insurance, why do they give you reduction? Because if you do not have the health insurance, then you may become dependent on the society. You would have seen lots and lots of messages coming on WhatsApp from Milap, Keto, and many other websites, where middle class people are seeking crowdfunding. And you, when you look at those posts, you may see a lot of known people. You may feel, oh my God, this person is, used to have such a great life. How come he is doing the crowdfunding? Because they used to have a great life. They forgot to go for the health insurance. So just to ensure that even they take health insurance, they are giving. So tax advantages are given to the public to ensure that they don't become dependent on the society or the government. That understand that pattern. Okay. So now we will understand the tax-free income also. But before that, let us now look at the tax calculator. Any questions till now before I start showing you the tax calculator?
I think there is so nothing on the chat window. There is nothing. Maybe you would like to continue, Kamal.
Yeah, yeah. No, what I observed one thing, that when we have the option to unmute people, they can instantly ask their questions. But when we have the chat option, not everyone's typing speed is good. So I whenever I ask the question on chat, I do wait for a minute at least so that people can type their questions. So fine. Now we can move ahead. I'll just show them the tax calculator. Okay, this is the tax calculator, and this is one of the very few tax calculator which can also allow the option of self-employed. The moment you select self-employed, you will notice that the options have changed, the presumptive, 44 AD and all that. Okay, whereas the moment you select salaried employees, you will see the annual gross tax, CTC, professional tax, and all that. And it will help you to, while you are filing your ITR for this year, or last year's income, which is financial year 25-26. So when you are filing your ITR for last year, you have to put the income of your last year. Okay, and accordingly, you put everything over there, and it will give you the which regime is suitable for you. And when you are planning for the current financial year, we have to understand that now uh, they have removed the terms like financial year, assessment year. So from 1st of April, they have simplified. They have called it a tax year. Okay, so this year is a tax year 26-27. So, but for the people who may get confused, I have put in bracket that this means financial year only. Okay, so now there will be no two words, tax year and assessment year, financial year and assessment year. There will be only one word from this year onwards. But for last year, you will still select financial year 25-26. Okay, and then you put your age. Let's say you are 39, and then you put your income. And everywhere, if you see, it is giving you a hint. Like, for example, where do I see my income? So it will say your gross salary is shown in the pay slip, and you need to exclude the employer's PF contribution. If it is including, you have to exclude it. So it gives you hint at every particular point. Let's say I say the salary is 18 lakhs. Okay, again here it will give you a hint of 2,400. Normally that is the professional tax, but it can vary by state, and Maharashtra has 2,500. Most other states would have 2,400. So everywhere, whenever you fill in anything, just look at the help section below that input box. Okay, so let's say I'm in Maharashtra, I put 2,500, I click on next. Here it is not showing you any blank boxes. It will asking you HRA, LTA, are you paying rent and do you want to claim HRA? If you are not paying rent, you don't want to claim HRA, ignore that, move to the next one. Okay, let's say if I'm paying rent, I click on I pay rent and I want to claim HRA. Here you will see annual basic salary. Okay, that is again usually again giving you a hint. It is usually basic 40 to 50% of your CTC. So let's say in my case I put that as 9 lakhs. HRA received, let's say I put it as 3 lakhs. Actual rent I put it as let's say 4 lakh. Okay. Now it will tell me to select the city and see why it is telling me. Just again look at the help section. 50% HRA the exemption is available for Delhi, Mumbai, Kolkata, Chennai. 40% for all others. And because I have selected financial year 25-26, it is allowing only for the 4 cities as 50%. But if I would have gone for 26-27, which is the current financial year, now even Bangalore, Hyderabad, Pune, and Ahmedabad are allowed 50%. Okay, so that's why it is saying in financial year 25-26, even the other 4 cities are included. So for last year, even if you are in Pune, you will get only 40%. But this year you are in Pune, you will get 50%. So that is where the help section helps you understand. And when you put all these amounts, it will do the calculation, it will show you at the end. Let's say I want to claim LT, then I have to see how much amount I have to claim. I have other exempt allowances. Okay. Like child education allowance. See again here, look at the help section. For last financial year, it used to be only 100 rupees per month. Okay, which is 2,400 rupees per year for 2 children. It is 1,200 for 1 children and 2,400 for 2 children. Hostel allowances used to be 300. Okay, but if you select the current financial year, then that amount has increased from 100 rupees to 3,000 rupees per month. Now the child education allowance is not 100 rupees per month, it is 3,000 rupees per month per child. And even the hostel allowance, which used to be 300, now it is 9,000 per month per child. So, if you are having that allowances in your salary for this year, you are at a maximum advantage. Okay, and now coming to the home loan. If you are having a home loan, you will select this option. Then you have to select whether it is a self-occupied or let out. If I select let out, then see, it will show you the municipal tax thing. This is most of the places they don't show, but actually municipal taxes are deducted from your annual rental income. Okay, if it is a let out property, municipal taxes are reduced from the annual rental income. Even then 30% standard deduction is there. Okay, see, here it is mentioned again. But if you are taken a home loan on a self-occupied property, then up to 2 lakh is allowed. Again, read the help section. Okay, and I click on next. If you are having other income like FD income, interest, savings, other sources, you can click on this and you can fill. And see again help section. Every time read the help section to get a better clarity. It says what you can include here. FD, interest, post office, rental income from other sources, but exclude the capital gain. They are taxed at a special rate regardless of the regime. You don't have to include the capital gains over here. Okay. And here again, we are talking about ATC now. So whatever amount here again it will giving you the NSC, LIC, EPF, home loan principal, pension fund, employee NPS, combined limit is 1.5 lakh. ATD, again look at the help section. If you are only filling for yourself, then you are allowed 25,000. Okay, see here, with this selection, you are 25,000. Now, if I say I'm doing for with parents, then it says with this selection, you get 70 up to 75,000. 25,000 for self, 50,000 for your family. Okay, and if you say yes, but parents are below 60, it will tell you with this selection, you can get up to 50,000 rupees. So based on your requirement, it will tell you what is available for you. And then comes the other deductions. If you are investing in NPS, it is allowed under old tax regime 50,000 rupees, which is your own investment. If your employer is doing for you on your behalf, that is a different, that is 80CCD2. But 80CCD1B is your own, if you are doing your own investment in NPS up to 50,000 and only under old regime. Okay, and if your employer is has implemented the NPS in your company and they are doing it on your behalf, then even under new regime, up to 40% is allowed, up to 14% of your basic, and under old regime, up to 10% of your basic. This is allowed in both the regimes, which is employer doing contribution. But if it is you yourself, then only 50,000 and that too under old regime. Section 80E, there is no limit on the interest deduction. Whatever interest you are paying under Section 80E. What is Section 80E? It is about higher education for yourself or your child, which is graduation, post-graduation, executive MBA if you want to do. You get an education loan. If you take an education loan, whatever interest you pay, that amount is allowed as a deduction. Okay, there is no upper limit on it. And it is available for 8 years from the repayment date, because these educational loans, usually they expect you to start paying as soon as your education gets over and you start earning. That is their criteria. That while you are studying, you don't have to pay the EMI. Once your education is over and you get a job, then you start paying that EMI, and you have to repay that entire loan in 8 years. And whatever interest you pay in those 8 years, that is allowed as a deduction without any max limit under Section 80E. 80G is about the donations, and you don't try to fake any donations. They look at the PAN number and everything, and they find out. And Section 80TTA is about savings account interest. Whatever amount you earn under savings account as an interest, that is allowed under 80TTA. And there are, so the calculator allows other deductions also, like when there's somebody has a disability, then Section 80U. If there's a dependent who is disabled, then 80DD. Okay, medical treatment, 80DDB, 80GG, rent without HRA. All the other sections, if you have any deduction, you can still claim that. Okay, over here, and then click on calculate my tax. And here it will tell you which regime is more suitable for you. If you see, it says old regime 2,56,000 and new regime is 1,50,000. You want to view the detailed breakdown, you can look at this breakdown is available over here, how it is calculated for you. And you want to, because most of the time we want to keep it as a record. Even when we are filling the information for this current year, we want to keep that record as to why did I select the new regime for this year, or why did I select the old regime for this year. So I want to have a record and what was the calculation. You can just click on download PDF result and you will be able to personalize it. You can even put your name and number if you need any help from me, and you can just click on generate PDF. And what about your other investment? Why we have not included your mutual funds and all those property and everything crypto? Because they do not have any impact on the regime selection. They are taxed under special rates, which are not as per your regime. Okay, whichever tax regime you are in. So now many people know up to 12 lakh rupees, if you are earning, you don't have to pay tax. But even if you are earning less than 12 lakh and that money is coming from your mutual fund returns, okay, that is a capital gain. It will be subject to a capital gain tax. Or if your income is coming from selling a property, that is again a capital gain. So those incomes are taxed at a special rate. They don't depend on your taxable income or your other income. They are specially taxed without looking at your tax slab. Okay. Any questions till now? Okay, fine. I'm seeing two questions. Okay. Tax regime on EL and HPL encashment for those retired on or after 1/1/2016. Yes, I knew that these kind of exceptional questions would come in. For such questions, you can definitely connect with me on personal window, and I will guide you on how to work on that, because these are not standard questions for everyone. Here I will be answering all the standard questions. Like, yeah, now coming to the second one. How about tier 2 and tier 3 cities? Including Bhubaneswar, it is 40% only. This year onwards, only 4 cities got added to that list of metro cities. Earlier, it was only 4 metro cities. Now, 4 cities have got added, which are like Hyderabad, Pune, and even I think Bangalore has got added now. So, 4 cities have got added now, but all other cities, it is 40%. How much is the cap? I'm not sure for cap for what. If you can ask me again. Okay, and my father is 60 plus, but mother is under 60. How to choose in this case? Go for the father's this thing, senior citizen. You because if you are paying the uh, Mediclaim premium, okay, for your parents, then whoever is older, that particular thing is applies. So you get that advantage. Tapan has asked a question about RSUs from my company. That question I would be able to handle on a personal level. Um, that is not in the scope for the employees. Yeah. Any other questions which are related to like any deductions or anything which we covered today? You can surely ask me over here. Any questions which are related to your personal situation, you can WhatsApp me, and I'll get back to you tomorrow itself, because today's session we will be ending by around 9:30 something. Okay, and now let me also show you the pattern. Okay, what is happening uh, with the situation of taxation in India? What is working according to you? Okay, you can just give me one answer, yes or no, or according to you, in future the income tax, okay, would increase in India. What is your view on this? Would it increase? Yes, or it will not increase in India? Ideally, no, no. Okay, 3 people have said yes, 3 people have said no. And so now it makes it very important for us to look at the pattern and then see whether what is going to happen. If you remember, we have seen many a times in the past that some company comes up and start giving freebies, start giving discounts, and just to make it a habit. And once you get into the habit, then they start charging you. Can you give me examples of such companies where you were intentionally, basically motivated for doing something? And okay, one is example is Geo. Okay, Chat GPT subscription, yes. Reliance Geo, very good. In fact, I have I pay around 15,000 to 18,000 per month on my AI tools, because my use is different. I don't just chat with the AI. I'm developing tools on that. Red label samples, okay. We pay tax for, absolutely, we are paying tax for everything. Because that's the reason we have learned about direct taxation and indirect taxation. In fact, indirect taxation contributes more to the government compared to direct tax. People feel, oh, I'm paying income tax, and other people are taking advantage. But your income tax and all that, it forms a small component. The major component is the indirect tax. Okay. So now just give me open minute. I'll just share the other presentation with you, which is regarding the pattern in the taxation. Okay, what has happened in the taxation part? Okay, here is the pattern. What rules have changed? Okay, if you look at now, with this you'll understand what is government doing for you all. Okay, so earlier there was there was no tax on the equity, which means all the people who are investing in equity mutual funds and all that, there was no capital long-term capital gain tax on it. Okay, but 2018 it was reintroduced, which means earlier long back it used to be there a tax, but then that was abolished long back. But now they have, after now if you see, it is the Modi government. I'm not saying government is good or bad. I'm just saying that with this government, what is happening with the taxation part? Okay. So nothing about politics. It's all about understanding how the governments work, what is their way of working. So here, first is they introduce the long-term capital gain. And at introduction, what they did was they kept it only as 10%. That whatever profits, capital gains you make, long-term capital gains, you have to pay only 10% tax. Okay, from 0 to 10%. And then employers contribution, what used to happen is many of the people at a very high level like director level and all that, what they used to do is they used to tell their companies, rather than giving me more in hand salary, which would be, because they end up paying tax around 39 to 42%. Okay, although you may say that maximum tax slab is 30%, but then there are surcharges and all those stress on that. So you end up paying 39 to 42% in the highest tax bracket. So they used to tell the company, you do one thing, you give me less in hand, because if you, even if you give me say 10 lakh rupees less, okay, for me the loss is only 6 lakh rupees, because anyways I would have paid 4 lakhs as taxation. So it's better that, I'm, what you do is you put that 10 lakh rupees extra into my EPF, or the voluntary provident fund, or you put it into my superannuation. Okay, and somebody would say put 40 lakhs from my income. Rather than giving me 2 crores, you give me 1.6 crore. You put 40 lakhs into my EPF or NPS. Okay, so that thing was happening and government understood that part. Okay, Nirmala Sithuraman is not just a finance minister. You may also call her as a tax minister if you want. So this taxation also was, what they did was they mm, kept a limit on it, which means you cannot take more of it as a deduct, I mean, put into your retirement fund and make it tax free. Because if you put 10 lakhs today additional in your PF, that 10 lakh additional would earn interest, and on maturity you will get the principal as well as the interest tax free, and that is going to make you richer. So what they said was no more higher limit. Now let us keep it at limit of only 7.5 lakh per year. So all of them combined, EPF, NPS, superannuation combined is 7.5 lakh. Okay, and by the way, now even if you are contributing to, I came across somebody who was contributing 50,000 per month as into VPF, and his own PF, which was shown in the salary slip, his own contribution was 20,000 per month. I said, listen, 70,000 per month you are putting into your PF. Do you even know that up to 2.5 lakh is only tax free, which means you are 20,000 per month EPF into 12 is 2.4 lakh already, which means the additional 50,000 you are putting into your VPF is taxable. You are not making it tax free because the limit of 2.5 lakh has come. So many times we follow advice which is outdated. In fact, I've seen so many financial influencers, creating daily content that they end up giving outdated information, and sometimes they end up giving a particular benefit available only in a particular state, and they will say for everyone. Sometimes, they actually talk about the things which are available in other countries. They don't even do their research. So do not believe what you see on the reels. If you have any confusion, send that reel to me and ask me what is the truth, and I will tell you the truth about it. Okay, so coming back to this, employer contribution, the limit was brought in. Dividend taxation reform, which means now the dividend will get taxed in the investor hand at their slab rate, which you are the highest slab rate, you end up paying tax on the dividend which you receive. So even the financial advisors which used to be put more money into property, go for the dividend thing and all that, they have become outdated after 2020. They have become outdated, and 2020 they brought the new regime, and what they are going to do is they are making it so lucrative that all the people shift, or most of the people shift to the new regime, and then they will remove the old regime altogether. And why they are doing it? Because in the old regime, every year they have to increase the amount of deductions. Okay. But in the new regime, they have hardly given any deductions. So they don't have to go for that every year. They have done a long-term planning. ULIP taxation up to 2.5 lakh if you are paying under in ULIP plan, only then the maturity is tax free. Beyond that, even that has become taxable. EPF employee contribution, as I mentioned, that interest on employee EPF contribution about 2.5 lakh. Okay, let's say if your employer is also contributing, you are also contributing, so about 2.5 lakh. If your employer is not contributing, then maximum is 5 lakh. Up to 5 lakh rupees EPF contribution is tax free. Beyond that, it becomes taxable. So which means doesn't, so all those who have been doing VPF, please discuss with me. I will tell you whether in your case VPF is still beneficial or not. Insurance maturity. Earlier, people used to pay crores of premium. I still remember in the month of March 2023. Okay, because in the month of Feb, it was announced that from next financial year, they are bringing the limit on the insurance premium. Okay, for the taxable part of it. So till 31st March, whatever insurance premiums were paid, okay, all the entire maturity is tax free for them. So in March 2023, people took investment plans or the insurance plans where they were paying premium of 9 crores, 8 crores every year, annual premium of 8 to 9 crores. They took those plans because they knew that maturity is tax free. Okay, but after 31st March 2023, up to 5 lakh rupees premium if you are paying, then the maturity by default is tax free. Okay, and beyond that, we have to do proper tax planning. So now also there are people who end up paying premium in crores, but for them we have to do a proper tax planning to ensure that they don't end up paying more tax. But by default, and here the limit started from 1st April 2023, which means whatever premiums you have paid before that period, they would not be counted in this 5 lakh limit. Any insurance premium in the insurance investment plan, any premium which you are paying after 1st April 2023, Okay, that annual premium limit up to 5 lakh rupees, you get maturity tax free. Otherwise, you have to do a proper tax planning. Indexation benefit. Again, what I have seen is people still looking at debt mutual fund, that in debt mutual fund you get indexation benefit. Boss, that is gone. Indexation benefit has been removed from the debt mutual fund. Now, even in debt mutual fund, you are taxed at your slab rate. You do not have indexation benefit. So your post-tax returns have definitely reduced. Okay, indexation benefit, to explain you, even in properties. Okay, in property, let's say somebody bought a property in the year 2000 and sold the property in 2020. You bought the property in the year 2000 at 10 lakh rupees and you sold the property in 2020 at 50 lakh rupees. So actually you are getting 40 lakh more, but you will not be taxed on that 40 lakh. There they will calculate the indexed cost in the year 2020, which may be around 23 lakh something. So your net profit would be only 27 lakh. I'm just giving you a hypothetical example, not the exact calculation. The only thing is you would not have to pay the tax on the entire 40 lakh, you have to pay on a reduced amount. So that was called the indexation benefit. Now that has been removed even from property investment, which means if you buy a property today and you sell it after 10 years, even if you buy today for 10 lakhs, you sell it after 10 years for 20 lakhs, you are going to pay the tax on the balance profit of 10 lakhs only. You don't get an indexation benefit. And even the long-term capital gain, which was introduced at 10%, it has increased to 12.5% and it is going to increase further in future, depending on, if you look at the other countries. Sovereign gold bond, if you would have noticed, there was a, announcement recently in 2026 itself that sovereign gold bonds maturity would be under the tax net on certain conditions, which means if you are bought from the government and then keeping it till for the entire period, then only maturity is tax free. But if you have bought your sovereign gold bonds in the secondary market, your maturity is not tax free. Okay, even the buyback and all those things. So they're also, so which means what has happened is from exemptions, we are moving to taxation, and more assets are being brought under the tax net, and uniformity, reporting, and compliance is becoming the criteria. And what is the way forward? Simply understand this. Higher taxes rates are likely. India is going to move toward the global benchmarks. Okay, and new regime, as some of you rightly mentioned in the chat, that new regime may very soon become the default forever. Old regime may be phased out completely. Inheritance tax, it is already there in UK, US, and other countries. It may come to India also very soon. Long-term capital gain may rise further, and there will be a uniform taxation system. And why I'm saying all this, there is a data to give you the understanding why this is going to happen. Okay, if you look at high income tax rate in India, highest rate is 42.7%, which is including the cess and the surcharges. Okay, for the highest tax bracket. But if you look at the other countries, the highest tax rate is Japan 55, Canada 54, France 50, Australia 47, China 45, Germany 45, and South Africa 45, UK 45, Italy 45. So you can imagine what is going to happen in India. Okay, we are among the G20 nations, and most of them are around 45%. There is still possibility of a higher one. Highest income tax rates in India, sorry, in the world, it is Finland has the highest one, which is 57.6%, Japan 55.9, which means again there is a possibility of India following the global benchmark. Highest long-term capital gain tax worldwide. Okay, if you look at it again, if you look at Denmark, Norway, Netherlands, France, Finland, All those countries, if you look at, you will understand what is the long-term capital gain there and what is in India. Look at Japan, you can look at UK, look at China, you look at USA, 20%, 24%, 26%, and where is India? 12.5%. So now you know why we went from 0 to 10% and 10% to 12.5% and where we are moving ahead. Can India bring in inheritance tax? Is there a possibility? Yes, there is a possibility. Why? Because if you look at Japan, if you look at UK, if you look at US, there is an estate tax, inheritance tax, 40%, 50%, 55%. Okay, Germany 30 to 50%. India 0%. Is there a possibility? Very much. Okay. So now you tell me what is going to happen in India. I won't tell you. Do you think we will be getting more tax-free options or we will be everything will be taxed? Okay. So I gave you every data that whatever it is, not just my opinion. I gave you data. Now you have to yourself tell me what is going to happen. Okay, and coming to the last part of it, I showed you the pattern also. I showed you the deductions available. I showed you how the salary is, taken care of, and I also showed you the powerful tool, which is very helpful. If you look at the notes, everything is going to be very helpful, very user friendly. You can download it, and you can many a times. Okay, let me tell you one thing which I observed every year. Whenever the time of return filing comes, CAs, chartered accountants are overloaded. Okay. So many a times you may forget to tell them and they may forget to ask you. Like for example, let's say you normally you do not do any donations, but assume that this year you did some donation. Your CA will assume that fine, every year you are not doing donation. This year also there will be no donation. Otherwise you would have told them. And you will assume that CA will ask me. Okay. In such scenarios, okay, nobody is at fault. The thing is communication gap. So when today you don't have to file your ITR today, there is time left. Okay, you have to file your ITR only after 2 months. So today when you're free, go and put all your numbers in the tax calculator. Download that PDF. Okay, do it for last year. Download that PDF to show it to your CA. Send it to your CA when you are filing your ITR, and download the PDF for your current year income, so that in the month of November, December, you can relook at it and see whether everything is as per the planned strategy. So that when you download it, and also you can get an option to ask me questions on that. I can just look at your downloaded file and answer your question. So that was the thing, and now final thing is about tax-free income. Let us look at that also. So tax planning today. Okay. Which means today you have to look at declarations, you approve deductions, exemptions, old regime, new regime, what are the tax changes every year. You have to look at it and accordingly do the tax planning. But your future income can be predictable, which means you will know what you will receive and when you will receive. Peaceful, which is no last minute scrambles or surprises. And tax efficient, which is structured to minimize the unnecessary tax flow. Okay, so that is possible. But today, I know there is one thing which my sister always says. She always says, ये लोग तो मिडिल क्लास लोगों पे, सैलरी लोगों पे ही स्पेशली मेहरबान है. सब कुछ पैसा ये लोग से ही लेते हैं. Which means what she means is that the entire income tax is paid by the salaried people. Okay, so I tell her that I understand your pain, but I'm doing something which will ensure that this pain will not be there after your retired life. Because if you look at a pension, let me tell you, pension is also taxable. Pension is considered as your salary. Okay, so when you even after senior age, when you may receive some pension, don't think it's a tax-free one. It is taxable. but it will get included in your taxable income. Depending on the slab rate or depending on the amount, you may not have to pay tax. That's a different thing. But yes, it is included in the taxable income. But the structure which I have built for my family and my sister and everyone is the tax-free pension. Okay, and that is possible. So you have to structure your future income wisely. And now let me tell you the options which give you tax-free income in India. I'm telling you some of the options. Agricultural income. In fact, a lot of celebrities are showing them as farmers and they are earning agricultural income and they don't have to pay tax on it. I have met some HNIs. I was invited by an HNI in Lonavala. He wanted to do with financial planning and tax planning. And he was earning in crores, but not paying any tax because that was being the way he had planned and strategized is because it was an agricultural income. Okay, and but then obviously when you have an agricultural income, there is a lot of work also you have to do. And this person, he had called me because he said, I want to stop doing any work, any agricultural work. I want to have tax-free income. Okay, that means I don't have to worry about all that work and all. Still, the money should come in my account. How can I do my planning accordingly? And he wanted to do it for his son also, so that's why he had called me. PF maturity is another source of tax-free income. Okay, you get the whatever amount you get as a PF maturity, you don't have to pay tax on it. NPS maturity up to 60%. Okay, now somebody might say that, sir, now it is 80%. No, tax free is only 60%. Now also tax free is only 60%. You can withdraw up to 80%, but on the remaining 20%, you have to pay tax. Okay. PPF maturity is tax free. So there are certain options, where the returns are tax free. Okay, and then there is a guaranteed income plan, which is also tax-free income. Okay, and that is about managing your future cash flow. So agricultural income, which is for most of you may not be practical because you are in urban areas, salaried employees, salaried professionals. Going to the village and doing that may not be practical for you. For some of you, it might be. I've seen many people who have left the job and they have become farmers. So that is definitely an option for them. But just because of tax-free income, you cannot become that. Now, if you have love for farming, okay, you want to be that one, then it makes sense. But no, don't do it only for tax-free income. PF already it's a part of your employment, so and now there is a limit of that 2.5 lakh. So there is hardly any scope left in that option. PPF is actually useful for the people who do not have a PF. So for you, it may not be useful. NPS is there, but there's no, I would say there's no guarantee on the amount. Many people are still under the impression that NPS is a secured option. NPS is not a secured option. Understand that. NPS is like a 401k of US. So for those people who have been in worked in US, they understand 401k. India's NPS was completely, I would say most of the portion was taken over from the 401k. Okay, and 401k is all about people putting their money and people taking the risk. Okay, so when you put money into NPS, it is actually a kind of a, you can say, a kind of a mutual fund where you choose your fund manager, where you choose as to how much amount would be invested in government securities and how much amount would be invested into equity and all that. And based on that fund performance, so there is a possibility that, when the market crashes, your NPS portfolio will go down also. Okay. Or in guaranteed income plan, it is completely predictable. It is completely planned, and it can be planned in such a way that you get tax-free pension kind of. It's a kind of a pension only, It's a guaranteed income, but it is tax free for lifetime. So it can be planned for you also, where you can make it tax free. I've done it for people like, they will be receiving 1 lakh rupees per month after retirement, and they don't have to pay tax on it. It is completely tax free, and it is guaranteed, no risk. Whatever happens to market, whatever Trump comes and says and everything, doesn't matter. Okay, whether there is flood, there is anything, there is war, you all know that, we are surrounded by the most friendly neighbors. Most friendly neighbors: Pakistan, China, Bangladesh, Nepal. So, okay, so just look at that, when anytime war happens, all your other assets, they are at risk. Most of your other assets, except for the assets which are basically secured by the government. So, which is called a sovereign backed instruments. By the way, even guaranteed income plan can be sovereign backed, which means if anything happens, government of India will pay that amount. So that can be a plan for you also. Okay. So yeah, these are the things, which you can have tax-free income. So for that, in fact, if you want to see, how the guaranteed income plan for can work for you, you can just go to gip.kamaljeswani.com. It will ask you for an access code because it is an AI powered system. It has been ensured that that it does not hallucinate. Wherever it will not have an answer, it will tell you to contact me. I've told it clearly, do not hallucinate. If you have the data, if you have 100% sure, then only give that answer. Otherwise, refer that person to me. So this is you will require an access code for that. So what I will do is today I will activate an access code, which is PMI MC. Okay, PMI Mumbai Chapter. So PMI MC uh, 2026, and that code I will keep it active for tomorrow. Till tomorrow end of the day, I will keep that code active, and you will be able to use it after 10 minutes. Okay, I will activate the code PMI MC 2026. It is not case sensitive. Okay, whatever you type doesn't matter. It will automatically get converted into caps. So that would be the access code that you can use. And I'm purposely keeping it only for 1 day so that, I'm giving access only to you all. So let it be only for you all. So now the first thing you have to do is tax regime calculator. Put your for your last year. Do it to identify which regime and download the PDF so that you can share with your CA to ensure that everything is in place. And GIP and then do it for the current financial year. So tax regime calculator for last year, tax regime calculator for current financial year, and then download those PDFs, keep it with you. And GIP advisor, you can use it once you're done your tax planning and all. In fact, even on the tax calculator, if you go at the bottom, once you're done your tax calculation, it will give you that option if you want to create tax-free income. From there also, you can directly go to GIP advisor. It would auto generate the code for you. You don't have to generate the code there. So that's it from my side. I think, yeah. Any questions? I think now I'm done from my side. Everything is done, and hope you liked it. I know I tried to cover a
It was
lot.
wonderful session.
Yeah,
Yeah, it
thank you,
was a
thank you
lot
so
to
much.
take. So there is one interesting thing. Is there any way to save tax on everything purchased from TDS salary?
Mm,
Question from
that
Pawan
that option
Kumar.
is available only for business people.
Okay.
So yes, for the under the old regime, the standard deduction is 50,000 rupees. Under the new regime, it is 75,000 rupees. So that is one, that is what they are giving you. And yes, there's one more thing, I have seen a lot of people making this mistake. If they are earning any money from a lent out property, they are putting that entire amount as under the tax. Boss, you don't have to. In fact, somebody came to me, and I would not name his company. It's a huge company, and the company is all about money and finance. And so that person, he said, I do my ITR filing myself, and this is what I show under the rental income. I said, boss, you are allowed 30% standard deduction, which means if you are showing 3,60,000 as your rental income, out of that, you have to reduce that 36,000 into 3. Okay. Because only that much amount remaining amount you have to pay the tax. You have lost so much money in that. So yes, we have to be very careful about that.
Yeah, of course. Thank you so much, Kamal. So
Maybe
I
one day we
think,
will organize a session on financial planning
yeah,
for this PM forum later
yeah,
on.
I think that, yes, yes, I think that would be very much
Yeah. For by the
helpful.
way, anyone who wants to invite me to their company, please understand for the corporates, I charge. Okay, there I charge 25,000 per hour. It's complimentary only for the associations like PMI, Rotary, Lions, and all. Only there I do not charge, but for the company, I do charge that. Yeah.
That is so grateful for you, for us. I mean, we are actually,
Thank you. Thank you. Thank
in
you for
fact, having you as a member of PMI Mumbai chapter is really
yeah.
helpful for us.
And my Mumbai chapter is more like a family. That's the reason since 2008, I have been renewing every year without fail. So
uh,
it has been almost
okay.
18 years now.
Okay. Okay.
Sure,
So,
Amit, you can call me for Rotary Club. It will be
yeah.
complimentary.
Yeah. So, first of all, thank you so much. So, let us go to the next slide. So, I don't think see any other questions in the chat.
So
We'll do
let us
this.
give
A
them
lot of
5
people.
minutes. Let's
Yes.
end the session at 9:30. But let's give them 5 minutes because so that they can type their questions. Many times,
Yeah. Yeah. Yeah.
typing failing.
Yeah. Yeah. Of course.
Yeah.
So, while they keep on typing the questions, if there are any,
Yeah. So in the
let
meanwhile, I will generate this code which I have told them.
okay.
PMI MC 2026.
So, Kamal, before that, this is a appreciation certificate which we would like to give it to you. So first of all, thank you for accepting our invitation and today's PM pit stop. I think I could see, it was really really wonderful, and
Thank you.
the way you were trying to convince me to have this session, and I really think that this was really needed and much needed for everyone. So this has to happen. So thank you, and please accept this appreciation. So we will be sharing this PDF certificate as a PDF copy, as a digital copy to you. I will be mailing it after the session. Uh, so once again, thank you. Yeah, and yes, everyone is also looking for PDUs. So PDUs, you will be receiving it. Just give 2 3 days time, or maybe till Saturday, you should be receiving an email. So please keep a check on your email, spam folders, inboxes, and all, and see you. I mean, the steps would be written that how do you claim the PDU. So PDU code will be sent to you in next few days in your inbox. Yes, and everyone was typing, thank you, wonderful session and all. But please share your feedback in written also, so that we can give Kamal another chance to come to and give us some more knowledge on financial planning, as he is saying. So your feedback would really really be important for us. So please do drop your feedback on this feedback link. I think let me just share the feedback link, or you can just scan this feedback QR code,
Yeah.
right?
And there's one
And
question in the chat.
yes, what are the
Uh,
benefits of advance
what are the benefit
tax
of advanced
payment?
tax
Yeah,
payment?
please take it.
Advanced tax payment is definitely useful when you under because for salaried people I don't see a need of advance tax payment because the TDS is calculated accordingly. But yes, if you are having other investments or other sources of income, that's where the question comes in. Because if you are paying advance tax, then you are avoiding the additional interest payment at the end. You are avoiding the additional amount payment in the end, in the last month, 15th March, then you have to, that is the last date of paying your advance tax. So it is only applicable if your income is beyond your salaried income. That's where it will be applicable. Otherwise, your company usually takes care to ensure that they are deducting more than what is the tax. I've seen most of the salaried people getting actually some refund. But yes, the advantage is only that you get you don't have to take a overload of paying last moment a big payment. Can we download the tool by visiting and mentioning the code given? Uh, I didn't get this question. Yes, if you're asking about the tax calculator, yes, when you go to the tax calculator site, you fill in your information. It will show you the download this thing. You can click on download, and it will download that PDF for you with the details, the breakup, not just which regime is, but also the breakup of different sections. That ATC, ATD, everything. It will give you that kind of a breakup in the PDF. And tax calculator, you do not require any code. You can directly access it. GIP Advisor is an AI bot. It requires the code, and the code which is valid till tomorrow, it is PMIMC 2026. And it is available on gip.kamaljeswani.com. Tax calculator is tax.kamaljeswani.com. A tax calculator you can share with your other friends, colleagues also. That's not a problem. GIP Advisor, because this is a premium resource which I am providing to you all.
Okay, any more questions
For
for
someone using the
someone?
new tax regime, does it make sense to opt in NPS scheme monthly deduction setup? If the employer is deducting on your behalf, you may put in some amount over there also, Jaideep. But if you really want to understand more about whether it is suitable for your personal financial thing, you can connect with me, and I will guide you. By the way, my financial consultation, the charges have been waived off for the people who have attended the session today. So you don't have to pay the charges for that. Half an hour guidance, it will be complimentary for you.
That's just wonderful. Thank you.
Thank you. I do this even for corporate trainings, wherever I do. I said, because you have attended my training, I don't have to explain much to you. I just have to help you connect the learnings with your financial situation. So my workload is reduced. So there are no charges. The charges are waived off. And yes, if you really want to understand more about finance and all that, on LinkedIn, I am creating newsletters where you will be. In fact, Saturday night, 8 o'clock, 8:25, I published my first newsletter. And by Monday night, I had 1,000 plus subscribers. And the subscriber quality was super. All the top, in fact, the topmost, it says that maximum subscribers are the founders, co-founders, and the CXOs, including top people from different banks, media company. They have subscribed to the newsletter because there I am revealing everything. In fact, this Saturday I will be revealing the bank paradox. What bank tells you to do and what they do themselves, that complete thing will be there. So you can get the the basically the truth behind what you hear and see and what is the reality, so that you will get it.
I think there's one last question. Why
Yeah.
stay in out of India and I'm paying tax in the host country? How will I be taxed in India?
In that case, you can just message me your country name, okay, where you are paying, because with certain countries we do have an agreement, okay, which is DTAA, Double Taxation Avoidance Agreement. So we have to see in your case also, I would have to calculate and I'll have to tell you as to which incomes, where you'll have to manage that. Like, for people who are staying in Dubai and all that, they don't have to pay tax there. They don't have to pay because
Uh,
a tax in India also because we have a DTA with them. And again,
I,
even there, DTA also, there are certain, conditions and all that which we have to look at for your country. So you can WhatsApp me and I'll guide you further.
yeah. Just for your information, he messaged Kenya. It's Kenya.
Yeah, so you can connect with me on personal window and I'll guide you further.
Okay.
Yeah.
Thank you.
Thank you. Thank you so much, Deepak. Thank you so much, Supradeep.
Okay.
Supradeep. Yeah.
I think we are already
Yeah.
beyond the time. So anyone, I will just repost the LinkedIn of Kamal so you can get connected with him.
Thank you, Mandar. Thank you,
Here is
Joginder. I'm sending
LinkedIn.
you the WhatsApp number. You will also find me in the PMI Mumbai Chapter WhatsApp group. Uh, I'll send the number over here. But when you message me, please do mention that you are from PMIMC. Then you are my own family. So special attention.
Okay.
And please do not expect reply today because today since morning back to back programs are there. Tomorrow definitely I'll reply everyone. Yeah,
I
very very
think,
very long day today.
yeah, yeah. So I think let's close it for today. And thank you so much. Thank you all for being a
Thank
lovely
you so
audience as
much.
well. Thank you. Thank you. Bye bye.